Hey, my name is Alan from, of course, The Dividend Investor, and today we are going to be talking to you about NVIDIA and is it a good stock to actually invest in right now? And also, it's a dividend stock. So, this is the Dividend channel, so let's dive into it and let's see what NVIDIA stock actually is going to probably do. So first off, NVIDIA is a graphics card company, but also a chip manufacturer as well. Right now, the reason why their stock is exploding higher, almost to the moon, I guess you could say, is because, of course, they are now bringing out new artificial intelligence chips. They have a whole brand new arm of the company where they're really working on robotics and the ability to, of course, have artificial intelligence that will incorporate into those robotics so that really there's no more manufacturing jobs available for regular everyday people. Now, nobody wanted to work those jobs. They're usually pretty dangerous. So this is actually a pretty good upgrade for humanity, but also a very big downgrade because those are usually some pretty high paying jobs. So, of course, what does this actually mean? Well, first off, there's a few things that we need to look at. Number one, NVIDIA as a company has done extremely well. I don't currently own them myself. However, I used to when they were like 20 bucks a share. I sold them at $50 a share. I basically doubled my money and I ran away and said, I'm good, I'm happy, and I shouldn't have done that. That's actually a very good lesson for anybody who is investing in high growth style companies. Maybe not dividend companies as what we discuss on this channel, but if you like or at least are slightly interested in riskier investments, then what you can do is basically buy a company and then once they double, you sell half, you get your money back, and then you let the rest ride. Every time it doubles, you basically sell half. And that's a great way that you can actually make a ton of money if you can find companies that are good over a 5 to 10 year period that are high growth. Now, when it comes to NVIDIA, yes, they're high growth. Are they still high growth because they've had like a 20% jump one day and a whole bunch of other jumps over the last, of course, month? Yes, they're still going to keep on growing. Their revenue is going to be exploding with these new processors and these chips that they are making. Now, what does that have to do with the dividend? Well, the dividend is actually quite interesting because, of course, with dividends, those are paid from earnings. If the company is going to be making more money, then they're going to be raising their dividend. Now, NVIDIA's stock or their dividend is only at 0.4%. That's basically, might as well round off to a 0.5%. It's a 0.5%. You're not going to be getting rich off of a 0.5% dividend. You could make 4% with a Canadian bank. You could make 3% with an American bank and a solid American bank. So what is this really? Is this really a dividend stock if you think about it? Yes, because now if they're high growth, then when it comes down to is if they're high growth, they're going to be making more money, which means that they can pay a bigger dividend. So just as a random example, this is probably not going to happen, but it potentially could. If they made 20% more income, that could be a 20% increase to their dividend, which would make it instead of a 0.4% dividend, then at the time of purchasing, then it would move it to potentially a 0.5% dividend. And then, of course, if their stock price rises and they want to try and keep it around that 0.5%, then on your initial investment, you could be looking at a 1% a couple of years from now, 2% a few more years after, and potentially 10, 20, 30% of on top of your original investment every single year if we look 10 years down the road. So that's why dividend investing is so key. Because if you're looking for future growth, then guess what? With future growth comes future higher dividends. So if you were getting paid, let's say $5 of dividends on a $1,000 investment with a company, and let's say that company grew over 20 years, now that increase of dividend is going to happen. And while your initial investment might be sky high at, let's say, $50,000 from your original $1,000 investment, you may be getting a $1,500 a year dividend, which 20 years down the road is pretty crazy if you really think about investing $1,000 at the beginning of the time of the investment. So you could that's why I really like dividend investing, and that's why I look for companies like Nvidia, potentially like Intel, but I don't invest in either of those companies right now, where if you're looking at companies like that and you look at their future potential growth of earnings, their potential future growth of dividend is also quite high. Now you could be looking at a very good payday 20 years, 15 years down the road. And if you're 30 years old like myself, 20 years down the road, you're 50 years old, that initial $1,000 that you didn't spend at the bar one weekend could turn into a pretty good payday every year of like a couple of $100 a month. So keep that in mind. Anyways, I hope that this video has helped you. Nvidia, right now, I would say it's a buy, but don't go all in. If you want to spend 20 grand on investing in Nvidia, I would probably say start off with a $5,000 investment because I think it could go down just a bit. Anyways, I hope that you've enjoyed. Hit that like button, subscribe, and I'll see you guys again next time.